Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
All right, ladies and gentlemen, welcome back to another episode of the Tech Guys Who Invest podcast, where each week we teach you how to invest wisely and safely. Well, this week we have a fantastic guest who is going to educate all of us on note investing, on what it's like to run a tech startup in the real estate space, as well as what it's like to be a fund manager. Now, Rick Allen is a co-founder and the CEO of Paperstack, which is an online mortgage note marketplace with digital transaction processes. Additionally, he is a co-founder of MWMfund, which is Money with Meaning Fund, which is an offering qualified under Regulation A by the SEC, which is now open to accredited and non-accredited investors and specializes in trading of distressed debt. So you, as an investor, are basically going to be part of a fund that helps other individuals stay in their homes, hence the term Money with Meaning. So if you want to learn more about Rick Allen or the NWM Fund, go on over to the show notes at tgwipodcast/Rick-Allen. So without further ado, here's the episode with Rick. Welcome, everybody, to this week's episode of the Tech Guys Who Invest podcast. On this episode, we have our guest, Rick Allen, who is the co-founder of Paperstack. He is a note investor and fund manager. The man does it all.
Thanks, man. Appreciate it, Kevin. Thanks, Adam, for having me on. It's been I've been following you guys and watching your journey kind of through notes, either on the platform or on Facebook, and it's exciting to see you guys. Congrats on pulling the trigger on your first loan.
Thank you. I appreciate that.
Yeah, it's awesome. Thanks a lot for coming on, Rick. We're really excited to have you here. Let's just dive right in. So the first question that I'd love to throw at you is why somebody would choose note investing over another asset class in real estate?
I don't know that they necessarily choose note investing over another asset class. I think it's a natural progression, or it's something that sort of evolves and happens. I know at least that's how it was for me. I was thick in real estate from 2005 through 11, and it just happened that an asset manager reached out to a bank agent and said, "Hey, do you have anybody that will buy a note?" And he said, "I know one person that would take a look." And so that's what happened. It was they reached out to us, and it was such a natural extension from real estate to go to notes. It was discounted, and so it was an easy transition. But I think when people get into the paper side of the business, they learn pretty quickly that, man, it's very similar to real estate in that it's backed by real estate, but it's also a little bit different because there's a lot of other different like exit strategies. There's different disciplines you need to know. So, I think it goes hand in hand with real estate. And certainly if you're a real estate investor, you should probably explore notes, whether it's owner financing or the other side of it.
Awesome. So what would be the advantage then? If it's a natural progression, what would be an advantage you'd say to note investing versus some of the other assets that you've done in the past?
So for note investing, I look at it like, one, it can be a very passive income. If you have a performing loan that's paying, it's kind of like receiving rent, but it's also not, because you don't have to fix the toilets. You don't have to fix the sinks. And when you look at the interest that you can make on a loan, interest is huge on there. Another positive or benefit to notes is that the amount of exit strategies you have. You can owner finance something. You can sell part of your payments. It's called selling a partial. So for instance, if you want to, you're like, look, I need to liquidate 10 grand. You can go ahead and sell the next, however many payments that is, at a discount to somebody else. And then once those $10,000 in payments have been paid to another investor, the asset reverts back to you. So I would say the multiple exit strategies are out there is one of the huge advantages. And then at the end of the day, it's backed by real estate. So if you made a good buy, you should be in an equity position, and that's always good. And then It carries two kinds of insurance. So you'll usually have title insurance, and you'll usually have hazard insurance, which is obviously it's nice to have something that's insured. Um, and it's a growing investment right now.
Sure.
And when it's sort of one of those things, it's counter cyclical. So when there's a huge downturn in the market, there's usually an expansion in notes that are available. Usually they're on the non-performing side, but you can buy them at such a deep discount that it makes sense, and it really works out to a huge advantage if you know how to buy and sell loans.
Yeah,
That's fantastic.
that we got to jump on that since you made it available here during a downturn, huh? It's counter cyclical. feels like this is really relevant right now.
It
So
does,
yeah,
right?
what are you looking at, right? Like how are you looking at things right now? Given for those who are listening to this, maybe later, we're right in the middle of the COVID-19 situation.
Yeah.
How are you looking at things right now, Rick?
Um, we're getting prepared, both on the Paperstack side and on our fund side. This situation is what both Paperstack and our fund was designed for. It was designed to capitalize on a down market. I'm looking for potentially, I think there was like a 10% default rate in '08, and Moody's is projecting that it could be up to 30% on this
Wow.
one. So 3 times as bad as the 2008, Great Recession recession. Is what it was. Just the 2008 when it was. I mean, we saw tons of defaulted debt, tons and tons of debt. Talking with some guys that are trading, I mean, they're several rungs up the ladder. They traded, 5, 10, 13 billion last year. Those guys, we were talking with them last week, and right now what's happening is there's going to be a lot of defaulted debt coming down the pipeline, because up until like the 15th of April, people had been furloughed or sent home. We were in quarantine. A bunch of the portfolio hadn't gone delinquent. Now that has gone delinquent, and it means that the portfolios at those high levels are worth a lot less. And now they're getting margin calls, and it's going to be a domino effect where there should be a lot of inventory coming down the pipe in the coming months. It's a domino effect, so it'll be, end of the year type of stuff before that stuff starts liquidating and hitting the streets. But it's coming.
Rick, for someone who is not an experienced note investor, and especially for people who may be interested in this but aren't quite sure how they're going to get started, what does getting prepared look like for you? I know you said that what you guys are doing right now is getting prepared, and especially from the notes perspective, what does that look like?
So for us, that's capital raising, getting our capital ready as far as on the fund side. We want to have as much dry powder as possible ready to deploy. A smart guy once told me, you don't catch a falling knife. So kind of you're going to wait until things are going to start coming down, but I'm already seeing pricing. People were able to trade at the higher levels at 95 cents on the dollar, and they were covering they're living to fight another day. 93 cents. It's just barely covering their personal guarantees on leverage, and trading right now is at 88 cents on the larger pools. So those guys are in trouble. So we're just ready to have our dry powder, have capital ready. If I'm new to the note business, I'm focusing on educating myself right now.
Sure.
Get education. Have a game plan. Know what you're going to do. Start looking at assets. Start evaluating assets, just so you understand what's going on. If you start looking at assets now, there's tons of tapes already out there circulating. You can find out what stuff is trading for right now, and you can kind of watch it. It's going to go down. It's going to go down. Just to kind of put things in perspective, the first note we bought in 2012 was a frame duplex. It was in Winter Garden. The debt was $90,000, and we paid $8,400 for it.
8,400.
Yeah, it's funny. The agent who brought it to me. I was like, well, I've never bid on a loan. Where does it need to be? And he was like, oh, probably 19, 20, maybe mid 20s. And I said, well, tell the guy I'll give him $8,000. And he's just yelling at me in my phone. I'm like holding it away from my ear. I'm like, no, just tell him $8,000. And they countered me at 8,400. And I'm like, all right, sold. This is great. And we actually wound up getting the house back inside of like 14 days. We didn't know anything at that point. We didn't even know what a servicer was. And we were waiting on, I sold the house. I put it on the MLS, sold it for 38. And I'm at my title company who I'd done business with for 10 years prior to that. And I was, I'm like, all right, can we close? She's like, no, I don't know that you own this loan. I'm like, oh, well, here's the sales contract. And she's like, no, you need I need to see an assignment of mortgage. I was like, an assignment of what? So I was on the phone with the people that sold us the loan. Like, hey, an assignment of mortgage? Like, oh yeah, it's in the collateral file. It'll be shipped out next week. I'm like, no, I need that now, man. We sold the loan, or we're selling the house. So, yeah, it's just that's kind of like $8,400 on a $90,000 debt. So that's kind of the pricing, right? So that was under 10 cents on the dollar. Right now, non-performing loans, you're looking at 55, 60, maybe 65 cents on the dollar.
Wow.
And so that stuff's going to start to come back down though, especially as it's just supply and demand, right? So as more inventory comes on, there's going to be more of a supply. So if I'm new to the game right now, I'm getting education. I'm looking to see what I'm going to buy. And I want to have a game plan for like, okay, where am I going to go? Am I like trying to get the house back, or am I trying to build like a performing portfolio? So there's a lot that you would just want to do, and just, have everything set up, start talking to people, listen to podcasts, go join meetups, and just surround yourself in it. It's the best way to learn.
Absolutely. Immerse yourself.
Yep. That's what we did.
Now, when you talked about trading, can you elaborate a little bit more on what that is for people that may not understand that?
Sure. So if I buy a loan or I sell a loan, I've just traded it. That's all it is.
Okay. It's just a different term.
It's just a different term. When you're saying trading, you're executing a trade. It could be a single trade where you're just buying and selling one load, or it could be a small micro pool, or 500 assets at a time. It's just industry jargon. It's just called a trade.
Okay, fantastic. When we're talking about non-performing notes, you're taking on this risk that they're not paying. So when I approach it, I look at how strong the collateral is, and maybe what the likelihood the borrower would be willing to stay in their home, something like that. Mm-hmm. What else would you look for if you were to analyze a note or a non-performing note?
If I'm looking at non-performing, I'm always running worst case scenario. I have to take the house back. That's like, and so I'm looking at, when people say collateral, there's two things that they could be referring to. They could be referring to the collateral package, which is the note, the mortgage, the assignments, and all the paperwork, or they could be looking at what's the house secured by.
Sure.
That collateral, the house. So if I'm looking at a non-performing note, I'm looking at both the collateral package, because I want to know what's in there, and I want to make sure, proper chain of assignments. I want to make sure if I have to foreclose, all the legal documents are there. But really, I'm looking at what's the value of the house, right? Because I don't want to overpay for it, because I know that I'm going to have legal fees, and the repair costs, stuff along those lines. So I want to try to get that house and look at the deal and make my bid based off of worst case scenario type stuff. Like, look, I'm going to have to take this back. It's going to be a kick out, drag down fight with legal fees. If it's in a judicial state, if it's in a non-judicial state, I might be a little bit more aggressive on my bid, in judicial versus non-judicial. So for those who don't know, a judicial state, you have to go through the courts to foreclose and get the property back. In Florida, where we are, it can take 1 or 2 years.
Wow.
And that's down. It was 3 or 4 years. New York is just, who knows? It's just forever up there. But then there's states like North Carolina or Georgia that are non-judicial states where it can be 90 days, and it's just a sheriff's sale. So obviously big benefits to that, both time and money.
Nice.
Yeah, interesting. So we talked about the advantages of note investing, and we talked about some of the risks. What are some disadvantages or things that people should be aware of if they're considering note investing?
One of the things that I like, for me, the biggest thing about a disadvantage of note investing is, there goes my daughter and my dog. The biggest disadvantages are, unlike real estate, arguably the asset is worth less every time they make a payment. That's like a huge drawback for me. As I look at it, I say, look, now I love making interest payments. I love not fixing toilets, but arguably real estate goes up on average 3, 4, 5% a year. But a note is starting decreasing in value. And that's just because as they make a payment, the principal balance drops, they owe less.
Right.
So for me, that's a huge one. There's a lot less control than if you're owning real estate. If you own real estate and you need to liquidate or sell something, usually there's a market and a margin you can get out of it, or you can leverage it. And you can pull out some equity on it. It's tough to tap your equity in a loan. That's another drawback to it. Those are the main ones that are out there. It's just like it's tougher to tap your equity, and then it's arguably decreasing in value.
Okay. Yeah, makes sense. Are there any things you can do to offset that, or is it just kind of part of the game?
So the decreasing in value, no, you can always trade. So you can buy non-performing, which is what we've kind of made we've made our name in the business by buying non-performing, turning them performing, realizing a pretty large gain there, bringing in some of the equity. Because, if you're buying something at 50 or 55 cents, and then ultimately you can turn around and sell it at 80 cents on the dollar. And in the meantime, you're collecting, interest payments, principal payments. It works out. You can get in, make some income, turn around, sell it, realize the gain, and you just got to keep moving.
Sure.
So that's one thing to do.
Nice.
If it's, also if you're buying like a big enough pool, you can leverage it. You can get leverage on it.
Didn't know
that's
that.
another way, and that obviously can increase your spending power and allows you to get more money. You can start selling partials is another way. So if you're going to buy a loan and you can sell a partial, you can sell, especially if you're doing non-performing stuff. So if you're buying a non-performing and turning performing, oftentimes you can sell a partial to recover your total amount that you had into the loan, redeploy that one, and just keep building that pipeline. So eventually those loans will start coming back to you, and you're in a position where, you've got a bunch of performing loans. You don't have really any basis into them. So that's another way to sort of hedge that and, start operating inside the loan space to mitigate the constant declining in value.
Nice.
Yeah.
So to make sure that when we're talking about partials, you're saying that if you buy a non-performing note and you read the story, the collateral right, you get the borrower reperforming again. You're saying that, let's say you what's the word I'm looking for? Restructure the loan for another 10 years or something. You're saying you could sell 10 years of those payments to another investor and get some of that money back from the non-performing. Is that right?
Sure. So you buy a $100,000 loan for $50,000. You restructure it. Maybe you get $5,000 in back payments. They'll just say, "Look, I need $5,000 earnest money," or something like that. You're in the loan for $45,000. You might be able to sell the next $45,000 worth of payments, to recover your money. And then usually that'll leave you with like maybe a 12 or 15 years left on the back end, maybe 8 years. But you essentially have that money coming back to you free and clear.
Right.
If for some reason it pays off along the way, there's what's called an entitlement balance, and the payoff will cover the entitlement balance, and then you'll get a chunk of money up front. So it can work out. It's like I said, you should get some education on that's a very technical play, and you wouldn't want to your first run at it not having done one before.
Yeah.
I would suggest getting some education before you go trying to run that play, but it is a great one to do. And at the end of the day, let's face it, there's, $14 trillion sitting in the self-directed investment accounts.
Yep.
There's a lot of people out there looking for passive income where they're like, I'm happy to get 8-9%. And when you start figuring in discounting alone, you can do that.
That's true. And I love that there's that money out there, and there are people out there that have it in there and they're just kind of like, I don't really know what I want to do exactly. And that's where educating yourself and networking comes in.
Exactly.
We wanted to talk about, you mentioned you made your niche with buying non-performing notes. And I know that you have a fund. I think it's MWM Money with Meaning. Correct me if I'm saying that wrong.
MWMfund, MWMfund.com, Money with Meaning Fund. Yeah.
And that's predicated on helping people stay in their homes. And I love that aspect that is possible with note investing. Would you be able to share one of your favorite examples of a big win helping somebody stay in their home?
Oh, for sure. There's been a couple of them, but I think the first one, the one that really shed the light on us of like, it was the one where we were like, wow, this is actually possible. We got into the business because we were real estate investors and it was a cheaper way to buy real estate. I didn't come into the business because like, oh man, we're going to be able to help a bunch of people. It's like, man, nobody's buying these notes. Obviously we got one for $8,400. We sold it for 38, 14 days. Let's do that again. We didn't put any money into it. So that's why we got into it. When we got some education, Kevin Shortell, you may or may not know, actually taught us. We left his 3-day class. He was teaching for note school at the time. We were driving back to Orlando from Fort Lauderdale, and we pick up the phone and we're like, all right, let's try to, TJ and I, who is my founder on the fund, and he's a co-founder in Paperstack. He and I had been buying loans for like probably 18 months before we got some education, which is kind of crazy.
Wow.
We didn't blow. Yeah, we didn't, we went in there with like $2 million under management and we owned 30 assets or 40 assets. So, when we sat down for education, we're like, okay, yeah, this is what we have our portfolio right now. They're like, okay, they're pretty excited to have us, but we really didn't know. You don't know what you don't know. Man,
Yeah.
We didn't know a lot. And so we took, on the ride back from Fort Lauderdale, we just made a phone call. We were still doing bar outreach at the time. Made a phone call to one of our borrowers and said, "Hey, would you be interested in doing a short payoff?" And the lady on the phone just started like sobbing. It was her dad's house. Her mother had passed away like 8 months earlier. She grew up in the house and they thought they were going to lose it. The people we bought the house from or bought the loan from weren't working with them. And so we were just on the phone with them and we were into it for 35. They owed us 70 and we're like, look, we'll take 55 for it. And they owed 70 in principal balance. There was like another 15 in past due payments. So they were so stoked. She was crying. Within 3 days, they wired us the money. We made 20 grand. And it was like, we were like, wow, that was great. It was like such a win-win. We got to help somebody. In that case, we didn't, they did get to keep the home. But also we made good money. We didn't have to spend money on any sort of foreclosure or anything like that. And so that was sort of the thing that kicked us off into like, let's look at like having purpose to our investment.
Yeah.
This was really cool. And so that we started going down that road. And once you start going into that road and you start helping people and you realize, wow, you can still make great money and help people, it kind of changed. It's a paradigm shift. You start seeing things in just a different light and you start looking for that, which is what we started doing. We started looking for that as we went. So that was great. That was one of my favorite kind of investments, outcomes that we had.
I love it.
It's fantastic. Total win-win. Love that.
Yeah.
So tell us a little bit about your fund, especially for people who may not know what that is. Can you just kind of talk about what that is?
Sure. So we have a fund. It's a Money with Meaning fund. Obviously, it's kind of structured around helping people stay in their homes. We're buying, discounted non-performing mortgages and keeping them in, working to keep the borrowers in their property. One of the unique things about the fund, and there's a couple of them, One is it's open to all investors. You don't have to be accredited to be part of the fund. So you can be accredited, non-accredited, and you can get started with as little as $200. It was qualified by the SEC under Regulation A last summer. So it's been, it's a Regulation A Tier 2 fund. If you've ever dealt with the SEC or you haven't dealt with the SEC, it's tedious. It's a lot of work. They're very thorough. Is about all I can say there. So, but we got qualified under them, and we can just start deploying capital now to really helping people out. So,
that's excellent.
Yeah, it's MWMfund.com. You go check it out, and we're putting together some free education, and we're putting together a program with actually in conjunction with Real Estate Without Renters. It's a Kevin Shortell thing that it's earn while you learn. So we're like giving if you invest $200, you get this course, and then also the $200 goes. You buy the course for $200. We just go ahead and put the $200 into the fund for you, and you start earning money.
Yeah, that's fantastic.
We're going to put that in the show notes.
Definitely. Yeah, I think a lot of people will be interested in that.
Yeah, because I think it's such a great investment class. And it is a little bit esoteric. You do need to know what you're doing. You have to study. You have to, I'll say education a lot. But also it's nice to for people out there who have self-directed retirement accounts, right? So, we were in Arizona, was it last year? And I kind of it was like a epiphany. I was like, people have dead money. If you own a rental and it's in your IRA, 401k, and rent's coming in, that's great. You're earning a return. But what's that money do? Probably just sits there until you build up enough money to go ahead and deploy it into a new rental. Well, with MWMfund, you can deposit as little as $200, earn up to 10% on your money, and there's no lockup period. We have a best efforts liquidity clause, which says if you call your money, we'll do everything we can to give you your money. We're not saying no, it's a lock period. You can't have it for, 18 months or 24 months. And so that allows people to really make one investment, make monthly investments, whatever you want, to start deploying that capital and actually start earning interest on your interest, which is obviously that's the key, right?
Yep.
Yeah, that's great.
That is great. So one thing that we wanted to talk about also is you have this brand that you're wearing on the hat and the shirt.
Yeah.
Why don't you tell us a little bit about Paperstack as well?
So Paperstack, it's an online trading platform. It's basically a place for people to go buy and sell loans. And it's got a fully digital transaction process. The idea behind it is obviously for an easy place for people to look at loans. Whether it's free to sign up, it's free to shop. Whether you're a novice or you've been in the business for 10 years, 20 years, it was designed to make it to where everybody could do business together. But also, it's meant to bring transparency to the process of buying and selling a loan. Prior to Paperstack coming along, as a buyer of a loan, I was expected to wire my money directly to the seller, whether or not I've ever met them before. And prior to them actually giving me the physical collateral package, which I got to tell you, we did one trade where we had around $250,000 out. And it was just the whole trade, top to bottom, was such a nightmare as far as they said the collateral files were in Dropbox. They were actually in Box, which is a competitor. And there was a lot of miscommunication. We came to find out in our due diligence that a lot of the houses were knocked over already, lost to taxes. And by the end of the trade, it worked out for us. But by the end of the trade, we were like, you know what? We need to put together some sort of platform that makes this stuff easy. It should make it easy. And so Paperstack, as at the time, it was investment note exchange was the name of it. Investment note exchange. And then after outsourcing, code base, came back with junk. We brought in a developer who's our CTO now, and founder, Mike. And then I think you guys have met Brett. He's another member of the team, Brett Berkey, biz dev and marketing. And really it's taken off since then. So it's been it's a great spot for people to start buying and selling. And I said at the beginning that Paperstack was built for a downturn. We've got some big institutional guys looking at the platform to liquidate assets, and potentially in the next 5 months we'll have real estate on there as well, REOs. So
nice.
And it is free to sign up. So just throwing that out there, people can sign up free on it, right?
Sure. Yeah, you can get on there, sign up. You almost need to have you need to have a login if you want to interact with anybody on there. So yeah, free to sign up. You can get on there and start looking at assets. You can start asking sellers questions, and never know. You may end up buying yourself a note.
So in the real estate space, it seems like the industry itself is kind of slow moving when it comes to incorporating technology.
Mm-hmm.
Why do you think that is? I'm just kind of wanted to pick your brain about that.
I think for sure in the financial industry, it's been slow. It's been, fintech was an oxymoron until the past 5-7 years, something like that. And I think it's just, if it wasn't broke, you didn't fix it, kind of thing. Another thing is, especially in the distressed debt space, it's cyclical, right? So, it will come around, it'll become a problem for a little bit, and then it usually goes away. And then you don't put money into something that's not really a problem. By the time the problem is gone, it's like, it's gone. It's not front of mind. You're putting money elsewhere, and then it comes back around and it's a problem again, and it's a nasty little cycle. So I think that was one of the issues. And don't disrupt the status quo. But I think right now it's changing. Everything is changing. Especially, I think the last 6 weeks, 5 weeks, however, I don't know how long we've been doing this, but I mean, that is changing everything rapidly. Even, maybe some of the trajectory on where Paperstack will be in the future on opening up our transaction engine to other processes other than just notes, real estate. We've had so many different people come to us and really want to, I say bastardize our process, for equipment leases. People are like, look, I want to securitize equipment leases using your process, because they use it and they go, wow, this is great. I could use this. People come to us with, 3,000 auto loans, a bunch of student debt, commercial loans. It just goes on and on and on. And to stuff that I never even dreamed of. I was like, equipment leases, like, what are you talking about? But, we've kind of seen like, okay, wow, people really, they like the idea of being able to do a digital process online, have automated to-dos. And, if I'm somebody who's like in the C-suite, if I'm a CEO or COO, I like being able to look globally at a dashboard and see what's going on at a granular level. So it's been, and so people probably don't know what the hell I'm talking about unless they go onto the platform and, they get a demo. They're like, what is this guy's talking about space. But no, it's really cool. So I think, everything is changing right now. And I think you're going to start to see more technology coming into the real estate space. And definitely, we're doing our part in the financial space for sure.
So Rick, with all of the things that you've accomplished, getting the note business going, that fund, launching a startup, what mindset wise, what allows you to continue to achieve, and what are some things that you think have been key to you being able to accomplish so much and to continue to grow that way?
Support staff is for one, like surrounding, support, like the support of my wife has been huge. That's helped me out because she's always been 100% behind you. You got to have somebody, like, you got to have a cheerleader, right?
Yeah.
So she's been a cheerleader for sure. But then also like surrounding yourself with people that are smarter than you at certain things. Our CTO is not only an unreal developer, but his business acumen is just through the roof. He's super smart. Brett is so much better at going out and talking to people and just wanting to be out there and do business development than I ever am. So I think our team has been so good, and we've gotten to where we are is because we complement each other so well. And also, we don't ever accept that if something is difficult, like we're just like, okay, we're not like, well, that's just the way it is. It's like, no, that's just not the way it is. How are we going to fix this with technology? And that's kind of been our mindset is, we have a saying at the office, it's 2x tech. If we hear something that's a problem twice, we have to fix it with technology. And the answer can never be ever. It can never be, well, we just got to work a little harder. That doesn't, you can't work harder to solve. You have to, okay, let's work smarter. Let's figure out how to do something. Let's fix the process to where it's never an issue again. So that's been it. And then, some people tell me I'm a type A, and I just want to be in there, but I don't know.
It's all good stuff.
Yeah.
Now,
Definitely.
You mentioned one thing that investors can do now is get educated. And you harped on that point, in which I agree 100%. I think Adam agrees as well. So in this case, if you were talking to your younger self, giving yourself advice to be a better investor, what advice would you give yourself?
Oh, what advice would I give myself? One, be patient. Patient capital is good capital. Look for that. Don't be afraid to say no to somebody. That's always a good thing. There's so much power in, somebody wants to say partner up with you and give you money, and they want to do it in the terms of the deal are just like they're not right. Just be patient. Just say no. You have to be able to say no. But then also be decisive. As much as you want to be patient, be decisive, sit down, have that game plan, and just be ready to go full into it. I think being decisive is probably the most important thing. Pick something and go.
Yeah, it's solid advice. Okay, so Rick, this is going to be a really fun one for you because you are also a tech guy who invests. You're a tech guy who starts up companies. That's awesome. So Kevin and I love to ask our guests about some piece of technology they couldn't live without. What's a piece of technology that you feel like you couldn't live without?
Man, it's probably my phone. Like that, I do everything on that. Send emails, I'm banking on that. I'm making, on the phone, my phone, I had to get like a new battery. It seems like I'm like, man, the battery is just dead. I would go through battery life so quickly. And it's because I'm always on the phone talking, or sending emails or doing something. So it'd probably be my phone.
It's amazing how that piece of technology has become so integrated in our society and our culture.
I totally
you can't
agree.
imagine living without it, man.
No, it's funny. People are like, "Oh, they'll never chip me." I'm like, if you have a smartphone, you're already chipped. You voluntarily carry it around, and people can find you wherever they are, wherever you are, no matter what. And it's, oddly enough, the phone, it is always listening. I can't tell you. My wife and I were sitting on the couch the other night. We were having a phone conversation about something that was like way out in left field, like something that we just would never search on Google or anything, and in her Facebook feed that like pops, like something pops up, and we're just like, yeah, always listening.
Would love that. Well, Rick, thank you so much for not only all the advice you did, but breaking down note investing, the advantages, and talking about Paperstack. We want to thank you so much for being a guest on the show.
And thank you guys so much. It's been fun talking with you. I hope to, come back and we can shoot the breeze about something else maybe in the future.
Great. Thanks a lot, Rick.
Thanks, guys. Have a good one.
That's it for this episode of Tech Guys Who Invest. This is Adam.
And this is Kevin. Thank you so much for listening to us. Don't forget to join our Facebook page where we're building a community of investors so that we can share ideas, tips, and other ways to help us get out of the rat race. If you found value in this podcast, it would mean the world to us if you could share it with your network. Lastly, we love feedback. It's how we get better. So if you wouldn't mind spending 30 seconds and leaving us an honest review on iTunes or Stitcher or whatever platform you're using, that would be super sweet. If you want to get on Adam or Kevin's calendar, go to tgwipodcast.com/contact. We want to help you invest safely, wisely, and ultimately get you out of the rat race. Thanks again.